What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Alina and Trigub. I'm sorry if I butchered that. How you doing today, Alina?
I'm doing great, Dan. Thank you for having me on.
Oh, it's my pleasure. And the best thing I gotta say, though, is my very favorite audience member is joining us today. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. And why would I do such a silly thing? Well, if you know about private off-market deals, also known as 506B syndications, then you know that you have to have a documented prior substantive relationship, or else the SEC is going to ruin the party. So we need to know each other's level of sophistication, appetite for risk, and all that kind of fun stuff. But before we get too deep into Alina's business, Alina, do you want to say a thing or two about yourself?
Sure. I have had a pretty successful corporate career of 20, 25 plus years. I've done many things in the past, from tax accounting to information technology to private equity. I am now a full-time investor. While it wasn't my choice, I got a pink slip during pandemic. I am absolutely grateful for this opportunity. I mean, I never wanted pandemic on anyone, still don't, but I couldn't be a happy person. I've been on my own for 3 years now. I'm an investor, investing myself. Helping others to learn about the world of investing, and just excited to be here with you, Dan. Thanks for having
Awesome. I love that. I love that. And it's funny because I thought a few years ago I made up the saying of I wouldn't wish a pandemic on anybody, which of course is really funny because everybody's affected by a pandemic. That's how pandemics work. But anyway, the five distinct motivations is the first segment of our show. But I got to say, but wait, check your eight. Alina, you mentioned IT. Can you see through your camera and at the 8 o'clock? Maybe they have this, it's hideous, this ugly subscribe button. The users may have that on their screen and they should maybe just, okay, it's a stupid joke. But anyway, I always do that. And that's just before I get into the distinct motivations. I've interviewed a whole whack of investors and syndicators and all that kind of stuff. And everybody has their own unique why. But I found that at the end of the day, they fit fairly cleanly into these five different categories, these five distinct motivations I've found. And it's really important that we know why somebody is getting involved in these deals, because they take months. There's plenty of risks involved, and we need to make sure that the person is going to follow through. So the first motivation, it's not my one, it's preservation of purchasing power. What's that all about? Well, some people already have a portfolio of assets, and then the proceeds from ownership is how they make ends meet. If that's
you.
the case, the only reason they're going to make their next acquisition is because either inflation is eating away at the purchasing power of their cash flow, or because they're buying at a steep discount, like when there's an asset crash or something like that. Once again, this isn't really where I'm at yet. Where I'm coming from is the trading time directly for wealth. Similar to Alina, I got a background in tech and IT. Specifically, it was the CRM industry, and I've
Mhm.
had my own agency around CRMs and web funnels since 2011, and I've been in real estate since 2014. But the thing that made me pivot was I was watching my old boss flipping 10 houses a month and going, why am I paying more income tax than anybody as a high wage earner, high salary earner? And it just plain
Sure.
doesn't make sense. So how can I
Mhm.
pivot into something where I'm getting rewarded in the form of deployed equity, deployed capital, aka equity? So that's why I'm doing all this. But a lot of people, especially youngsters, they want to fast track their retirement. They want to control their schedule, and that's what's bringing them into commercial real estate. And maybe it just means that they want to work fewer months per year or fewer weeks per month or something like that. Or maybe they actually do want to fast track their retirement. But the idea is these people want to scale back a little bit. And that's in stark contrast to the fourth group. They're just plain ambitious. They want to buy their entire hometown because they're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And so their ambition is going to make sure that they keep hustling into their 90s, making them very, very valuable parts of any GP team. But they're a little bit different from the last group, though, which they've found a sector of society. Maybe it's animals, maybe it's the environment, who knows? But they realize that you need a very substantial financial backing if you're going to make a really big impact. And that's why they're making these acquisitions, is to forward this other cause. Now, of those 5 different motivations, Alina, what jumped out to you? What combination of them would you say describes you best?
Great question. Definitely help those who need. I've been always a big supporter of helping others, and that's actually what I'm doing right now, because when I started my real estate journey as a passive investor equity partner, and after doing it for several years and realizing tremendous benefits of it, I thought, why not help others? Why not show others the path that they don't know about, completely outside of Wall Street, that can essentially get them the same results or better, and on top of it would give them tremendous tax benefits. And that's how Samo Financial was started, with that whole purpose of helping other people follow my lead and start learning about passive investing and syndications, and start investing in syndication and diversifying their portfolio into something that's completely decoupled from Wall Street. And it's been an amazing journey. I have many satisfied customers that have learned from me and now investing on their own, essentially.
I love it. I love it. That brings me to the next question, though. It's the tolerance for risk assessment. If you've ever been involved in a 506B deal, because of the securities attorneys, they're going to insist that you fill out this really invasive questionnaire, ask all sorts of questions about your finances that are fairly uncomfortable to answer. But the reason why they ask that you fill out these questionnaires is because you have to understand the risks involved in commercial real estate. And I found that in those questionnaires, the question about risk, it wasn't very well phrased. It didn't really prove to me that the person knew what was going on. So I have this question in these interviews. Alina, please fill in this blank. There are many popular investment asset classes, but I think blank is too risky. The answer can be inside real estate, outside real estate. You can give both if you want, but what's too risky for you?
For me, it's crypto. And the main idea behind this, as a real estate investor, I'm used to tangible assets. I want to fly out there, touch them, feel them, see them. If I can't see it, if I can't touch it, it's not something that I would ever invest. So.
I love it. I love it. And after all, you can't eat it, which brings me to my
would be tough to eat that, yes.
segue, right? That thing, it just kills me every single time. It's just another very subtle reminder for people to subscribe, but it's how we get into the Dan Does Deals core competency cube for these different commercial deals. And if you want your own copy of the die, you can go to dandoesdeals.com. It's absolutely free. And like a complete dummy, I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can do. Never give away your freebie without asking for contact information, but I do it because I want to make sure there's nothing in your way from going to dandoesdeals.com, downloading and printing out your own cube so you can practice talking about the 6 different sides in the deal with your friends, your family, because I really think your success in commercial real estate really hinges on your ability to communicate effectively on how these deals work. And in every episode of Chance Encounters, I go through all 6 different sides, and then that way you will be able to understand how my guest fits into these deals. So let's get started. Repositioners are the first people I want to talk about. They are acquisitions people. They're looking at lots of different properties and they're doing lots of different paperwork. What is this paperwork, you may ask, but probably not. Well, there's a fancy word for it. They're underwriting the deal. That means they're doing the math. They're figuring out, first of all, wait a second, is this property even making the amount of money that the broker/seller claims it is? Because probably probably not. And the repositioners going through those numbers and making those acquisitions, being super duper careful because they're looking for upside. They're trying to find out how can they make this building, this property more profitable than it is right now. And that's what the repositioning part of this investment action is up to. And one of the weird things about repositioners is they all do a lot of investor relations. So they're talking to a lot of financiers. Financiers are people who only deal with paper and money. So they're not on the GP team. They're not doing any of the work. They're only dealing with the loans and things like that. And the reason why financiers are such an important part of every repositioner's job is because if you can get a more advantageous loan, that goes straight to the profitability of the property. So they're always looking for cheaper money. But that's a little abstract for some people. Most people, when they learn about repositioning, they're thinking about operations. They're thinking, how do we stop those Benjamins from going down the toilet? But there's more to operations than just unclogging toilets and collecting rent and mowing lawns and all that kind of fun stuff. One of the things that I bring on top of the automation from CRMs and digital in general is also the marketing piece. And even if you are outsourcing your property management to a third party, you might find yourself in a situation where with a vacancy rate problem. And then somebody on the team has to have really top-notch marketing chops if they're going to fill those vacancies. So that's one of the ways that I contribute to my team. But of course,
It's good to have.
right. But of course, with operations, that's probably not enough for most repositioners. There's not enough upside. So they'll frequently get a contractor team involved to do a value add. They'll do the renovations, the upgrades to the units so that they are nicer. And then that way, the next residents will be more than happy to pay more in rent than the previous ones. And that's all well and good, but one problem you might run into with having this contractor team doing all this work on the property, especially if you're like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that will not be me. I'd still be stuck at an airport in an hour or two. So my deals are really dependent on having those locals, those boots on the ground. But when the repositioner has assembled this team and they turn around to the financier, they say something along the lines of, hey, I got this perfect property that I want to buy. It's 350 units and it's tens of millions of dollars. You don't happen to have, I don't know, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one burning question that I haven't answered yet, which is, who's your sponsor? Who's the sponsor of the KPs? What's that all about? So if we're going through this hypothetical, let's say you're in IT, let's say you're an engineer or you're a physician or an attorney or something like that. You decide, let's pool our resources, me and my friends, and take over a commercial building. The snag you're going to run into is you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. So that means if you're looking to pick up a 350 unit apartment complex, somebody in the fold has to already own a 350 unit apartment complex, or the answer is going to be no, or they're going to just make it much more expensive for you. But on top of what I mentioned, you need a certain amount of liquidity, and among the GPs, you need a balance sheet of at least the amount of the loan. But if you've got all those pieces, you've got yourself a commercial real estate deal. So, Alina, as far as the sides of the die that you focus on, what are you most likely to contribute in your next deal?
Due diligence is definitely big for me. Also, asset management is huge. I've done it multiple times in the past, and because of my attention to details and the ability to talk with people, I can do it, like you said, flight away, any kind of distance away. So I've done asset management and enjoyed it, and will continue doing that.
Excellent, excellent. So that brings us to our buy box then. And when investors, commercial real estate people in general are saying, hey, what you looking for? What's your buy box? What's your ideal property? We're really asking for three main things. First one's geography. Where is it? Which states? Which counties? Possibly even with which neighborhood, okay? Everybody's gonna have some locations that would be considered ideal. So that's the geography piece. The second one's gonna be size. Most of my guests on Chance Encounters are in multifamily, which means apartment complexes. And the way that you measure size in an apartment complex is by unit count. And the reason why it's so important is you're going to have a completely different kind of group taking over 15 unit apartment complexes compared to 150 unit apartment complexes. So that size definitely matters. And sure, there's other forms of commercial real estate like industrial or warehousing where they go off of square footage, but that size is still going to matter. But the third one is class. And one pet peeve I have is when people use the same word for more than one completely different thing. So I separate class into condition and area. Condition refers to how old the building is, how beat up the building is it more or less up to date? And then, of course, the luxuries and amenities, like, is it really nice? Like, does it have a swimming pool and a gym and stuff like that? Or is it just really just you get a room and nothing else? Okay, so that's your condition. Now, area, on the other hand, they're talking about a few things. One of them is what's the crime rate like where the property is located? Another one is what are the school districts like where the property is located? But in general, they're talking about the desirability of the area. So that also includes how many people go through that area in a given day. But both area and condition, both of those versions of class, they're ranked the same way as in grade school, with A plus at the top and then A minus and B plus and so on. But Alina, as far as your buy box goes, what's easier to say yes to and more difficult to say no to?
At this point, it's probably everything but multifamily. We're actually concentrating more on strip malls, shopping plazas, flex space, medical office space. In terms of the doors units that you asked, then it's very different from multifamily real estate. So it could be as little as one single large tenant to a couple of doors to 10, 15 doors, if you will, or stores, whatever you want to call it. As far as the area, we are looking at anywhere from C plus to an A area, and the asset is C plus or above. For us is we always look for value adds. We did that with multifamily. We're doing the same thing for the commercial real estate. Our main concentration is North Carolina Triangle area, Moore County. For now, we're open to looking at the other areas, and we have looked at other areas, but that's our prime targeted location for now.
All right, beautiful. So then the next question is about people, and it's who is the best person to reach out to? And I gotta tell you, one of my favorite parts about commercial real estate is because it's multifaceted. Everybody's really eager to help each other out and build new teams. But at the same time, because we have our own unique skill sets, we're better suited to help some people more than others. Me personally, because of all the tech and internet stuff, content creation, the sponsors and KPs, I'm always eager to talk to. And the other thing is because I'm from the internet, the locals are people who I always need to talk to because that's the antithesis of the internet guy. But Alina, I don't know if you have any 506B deals going on, or maybe you have a fund already or something like that. But I just like to mention to people, it's like, don't be enticing investors for your 506B deal, because that gives the SEC ants in their pants. But who on the die are you best suited to help? Who are you looking to talk to?
I am happy to help people that are getting into this as passive investors if they want to learn. I'm doing group as well as one-on-one coaching, and provide guidance as to how to become more sophisticated in their investing. I would be more than happy to talk to some locals from Moore County, in North Carolina, of course. That always helps as well. And then in terms of reaching out, I mean, my prior background is in multifamily real estate. So if there's anything I can help, some nuggets that I can share, I'm more than happy to help out others as well.
I love it. And then as far as reaching out goes, I'm really easy to find, especially on LinkedIn. I got this distinct last name, so it makes me really easy to find. But if you use your phone and you scan this QR code, that goes to the FAQs page of 506B Me, which is the platform I offer where I support you in documenting your prior substantive relations with your investors. So the thing to know is that once you get to a certain number of assets under management, the SEC will audit you, and they need to make sure that you weren't pitching people all willy-nilly, especially under an exemption where it's supposed to be private deals and you're not allowed to publicly solicit anybody. But that's me. Alina, I know you from you're fairly active on LinkedIn. I know you're on there, but what are the best ways for people to reach out to you?
They can Google my company name, Summer Financial LLC. They can Google my name, Alina Trigub, or like you said, LinkedIn or other social media handles, Facebook, Instagram. I think I'm on YouTube as well. So it's relatively easy to find me. Thank you, Dan.
All right, beautiful. And then the last thing, it's actually not for you, Alina. It's for you in the audience. It's a public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's the hideous subscribe button, which is right down there. And if you hit it, it's free. It doesn't cost you anything. All it means is my videos might show up on your list of suggestions. And the reason why I'm so eager for people to hit it is so that YouTube starts paying for these videos instead of me. I think that would be amazing. But you don't have to worry about any of that kind of stuff. You can ignore all the suggestions of my videos on your YouTube. I just appreciate the fact that you spent this time with me. Just like Alina, I'm glad you joined me today. This has been great getting to know you.
Thank you, Dan. It's been a pleasure being here. Appreciate the interview.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay. Yeah, oh, yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.